Hello, welcome to this week's Forex Outlook here at xm.com. My name is Rafi Barajan, currency analyst, and here with me is our chief economist, Michalis Solanidis. So, Michalis, it's been another volatile week for financial markets, particularly for equities, as well as the US dollar. It's been up and down. Now it's back up again. We did have that sell-off yesterday, and now we're seeing a bit of a rebound. So, what's been driving the markets this week?
Basically, this was a bit of a strange week in the sense that the markets got back into full activity mode only on Tuesday because of the Easter holidays, and most of Europe and other countries were also celebrating Easter this Monday. So this led to kind of a slow start to the week. And basically what was driving the moves this week, we had announcements from China that they were planning to retaliate against the trade tariffs that President Trump had announced before. And this led to worries about a trade war and an escalation of tensions about trade. So this led to severe risk of sentiment, to a sell-off, safe havens gaining, etc. But there were some reassuring words from the White House's new economic advisor, plus the market took a second look at it and said that probably a trade war is not in anyone's interest, and they expect everyone to behave like an adult at the end of the day. So they said that this risk might have been overstated, and this led to a rally in stocks, in the dollar. So we have this back and forth, or is it a negotiating tactic? These trade measures, are they going to be something that is actually going to be implemented? We'll have to see. But right now the market is taking a benign view. Strangely, with the trade measures, one currency that was helped was the Canadian dollar, because we have some optimism that a deal on NAFTA is going to be announced soon. And the Canadian economy is very sensitive, of course, to its trade with the United States. So there are hopes that this will help Canada, and this has helped to rally for the loonie to rally.
And we also saw the Australian and New Zealand dollars also not doing too badly despite those trade risks. The euro and the pound, on the other hand, seem to be struggling this week. How did those two currencies fare?
It was interesting. I think the UK data on balance, we had business confidence indices, PMI indices for services, construction and manufacturing, and particularly the services one was a bit weak. This was attributed to very bad weather, but on the other hand we saw quite a strong manufacturing PMI, or at least beating expectations. So we had kind of mixed data, and the data did not really help sterling extend the strength that we had seen in previous weeks. And neither did Eurozone inflation help the euro. Eurozone core inflation, so adjusted for some main items, it seems that it came in below expectations. So this is leading to some toning down of expectations that the ECB is going to withdraw stimulus more aggressively. So yes, the euro and the pound, two currencies that were doing well previously, looking like stalling this week. But having said that, Rafi, what do we have to look for next week? I understand it's going to be a little bit more quiet than maybe the key data that we are getting this week, especially tomorrow's non-farm payrolls and Canadian employment report. So what can you tell us about next week?
Indeed, it's going to be another fairly quiet week. Next week, the highlight will likely be US inflation numbers for March. The headline rate is expected to rise to one-year high of 2.3%, although we know that the Fed doesn't really focus too much on the headline rate. It looks more at the PCE measure. So it's going to be interesting to see whether or not the dollar is going to be get any much of a lift from that data. We're also going to have the minutes of the Fed's March policy meeting to be published next week. plus the European Central Bank will also publish its minutes. We're not expecting any surprises from either of the central banks in terms of views, in terms of what we don't know already. But of course, any surprises could lead to some volatility, of course. We're also going to, sticking on the trade theme, we're going to have some trade numbers out of China. Those could potentially come into much stronger focus than usual, given what's happening with trade tensions between the US and China. We're also going to have industrial output numbers from the Eurozone and the UK, but like I said, all in all, it's going to be a relatively muted week.
So we'll see developments either in the US-China front or on the NAFTA front maybe could have an effect. And it's interesting what you said about inflation, because it will be harder for the Fed to stay on the sidelines with 2.3% headline inflation, even if that is not the key indicator that the Fed is watching when setting policy. Thank you very much, Rafi. Thank you everyone for watching, and have a great day.